And if we plug all these percentages in, it will look like this. Ta-da! See? It's not so difficult. Not so complicated after all. Now, if we translate this into mathematical format, it will look like this. Alright? So 60% is 0.60, 5% is 0.05, 35% is 0.35, and remember to add the 1 over here. It's 1 minus 35, and here it's 1 minus 0.35. And 40% is written as 0.40, and 10% is written as 0.10. Simple as that. Okay? Now, you might be wondering, why is there a minus 35%? Why do we have to think about the tax rate? Okay? Why don't we just use the debt and the interest rate, and then use the equity or the owner's investment and the cost of ownership? Why do we need to know this? Well, that's because when you pay interest to the bank, the government allows you to write that down as an expense. Okay? As an expense. And when you have an expense, what does that do? When you write that down as an expense, then that actually lowers your taxes. So expenses are bad because it costs you money, but it's actually not so bad. It's actually not very bad because it also lowers your taxes. So this 35% here, okay, so you're wondering, why is it minus 35%? Because this minus 35% represents the discount that you will get on your taxes because of this expense. Alright? It's as simple as that. But if you don't understand that, then don't worry so much about it. Just believe me when I tell you that you should add this part to the debt side or the debt area of the equation. Alright. Anyway, if we add and multiply all these things together, we will find that the weighted average cost of capital is 0.0595 or 5.95%. So there we have it. We knew that the cost of capital was a combination of somewhere in between 5% and 10%. But we did not know yet exactly how much. But now we know exactly how much it is. And that is 5.95%. Alright. Next, don't stop there. Wait, don't shut off the video yet. It's not enough to know this. It's very important to know, how do we use the WACC, or the weighted average cost of capital? We already know that it's 5.95%. Well, so what? How do we use it? Well, 5.95% represents how much it costs your money, it costs your business or your company to get money. And so we now compare it. Let's just, as an example, let's just say that your company has a proposed new project. Okay, So let's say this is you over here or your manager, and you're thinking about whether or not to do this new project. Okay? And let's give an example that you estimate that this project will earn a rate of return of 4%. Okay? Let's say it will earn a rate of return of 4%. Now, will you do this project or not? The answer is no. You should not do this project, because if your weighted average cost of capital is 5.95% and you earn only 4%, then that means that your company is losing 1.95%. You see, it's as simple as that. However, if you estimate or predict that your company or your project or your company will earn a rate of return of 8%, should you do this project or not? And the answer is yes. Why? Because if your weighted average cost of capital is only 5.95%, but you're earning a rate of return of 8%, then that means you make a profit of 2.5%. You see? That's as simple as that. And that is how you use the WACC. Now, very important reminder. You only use the WACC formula or the WACC concept if your company has both equity and debt. Alright? Now, why am I saying this? Because in simpler problems, in simpler problems, your professor might not give you the cost of equity, and he might not give you enough information to compute the cost of equity, and instead he only gives you the cost of debt, or he only gives you the bank interest rate. Now, in that case, you compare your rate of return only to the interest rate of the bank and not to WACC, which is here. Okay? So remember, you only use this WACC, weighted average cost of capital, if the company has both equity and debt. Alright? So now that you understand the basic concept of the WACC, or the weighted average cost of capital, you're now ready for my next video on exam training, because this video was just a very simple example, and it is not enough for you to pass your exams or to get a high grade in your exams. So check out my next video for exam training. Alright, so remember, please share it if you like it. On Twitter, my nickname is MBA Bullshit, and another way you can share it is to please share my YouTube link on your Facebook to your other friends who might be interested, whether they're students or business executives or whatever. Alright, so thanks and have a nice day. Have a great day. Take care. Goodbye.